One of the common biases that we as investors suffer from is trying to follow and copy what the rest of all the people are doing. And this is popularly called as the herd mentality bias. Now, as the name suggests, we find great comfort in doing as per what our friends and relatives are doing. And that gives us great joy, irrespective of what the outcome is. This happens because genetically we are tuned to follow and be part of a larger group. That's how we survived. 5,000 years ago, if you weren't part of a group or if you weren't part of a tribe, you wouldn't have survived. So to be part of the tribe, you had to do what the tribe did, you had to follow what they did. And that's how this herd mentality in all of us is generated. But today, is it relevant? Is the real question. Today, can we be little contrarian to the herd? And is there a merit for looking at things differently? Absolutely so. In the early 1950s, America was split between the blacks and the whites. It was common that buses had seat segregation, separate seats for blacks, separate seats for white. In the midst of this was a young African American girl called Rosa Parks. In 1955, traveling in the Montgomery bus service bus, she refused to move out of the seat in which she was seated in favor of giving it to an American, white American. And that forms the basis of the Montgomery bus service boycott, which followed thereafter, leading to the civil rights movements, where blacks and white Americans kind of became equal from that day onwards. In the investment world, herd mentality plays a huge part. In 2007-8, in the Indian equity markets, for every 1 rupee that was invested, 70 paise went into infrastructure as a sector. The sector was already overvalued. Lots of companies that weren't making enough money were getting a lot of high valuation. Things were bound to break thereafter. And so too happened. After the global financial crisis, all those infrastructure companies went bust, leading investors to lose a lot of their precious money. So if you follow the herd without thinking for yourself, there's a good chance that you're going to lose money. Now, ways to overcome herd mentality is always develop an ability to critically think. It's extremely important to critically think independently for yourself. That's the first. Second is be prepared to look at it contrarian. Every situation has another view of it. Contrarian view. Look at situations in a contrarian. Look at your investments from a contrarian view. Third, develop a mindset of creating scenarios. Create a framework of scenarios. Every investment has multiple scenarios that it will play out. So understand those different scenarios before you make your decisions to go ahead. While herd mentality is a natural instinct, knowing that we suffer from some of these biases will help us going forth understand and critically evaluate our decisions before we accept it. We will not do things because our neighbor or our friend is doing. Evaluate it a little bit more, and I'm sure your investment decisions will be worth its weight in gold.